Who buys businesses that own their buildings and why it matters? And if you're selling a business that owns its real estate, you're not just marketing a company, but you're also marketing two assets simultaneously: the operating business and the underlying commercial property. And that distinction is critical. Different buyer profiles evaluate these deals through entirely different lenses. And if you don't align your marketing, your pricing, and your deal structure with the right buyer type, you'll leave money on the table, or worse, fail to transact. So let's break down exactly who these buyers are and how they think. So, first bucket is owner operators, and they want control of the business and the cash flow. And your profile there is they're typically entrepreneurs looking to run the business themselves. And what they care most about would be stable cash flow from the operations, but also control over occupancy costs and long term cost certainty. And they understand the benefits of owning versus leasing. So, how they underwrite the deal is a little different. They're going to look at the business income first and real estate as the supporting asset. So, the key insight there for this buyer: the real estate is a risk reducer, not the primary investment. So, strategy for them is to position the deal as, you own your own business and your building, lock in your future overhead now. Two is private investors, and they're more thinking, is this a passive play? So your profile there is typically high net worth individuals who are looking for yield and stability. And what they care most about is passive income, tenant strength, is this business stable, but also lease structure, triple net versus gross, and how they recapture expenses over time. And how they underwrite is typically from a property income, the NOI standpoint, and they look at the security of the lease. And the key insight there for them is to view the business as a tenant, not as an operation. So a strategy highlight is there's long-term lease potential, there's strong financials, and there's minimal management involved. And that's really what they care about most. But then you have real estate investors. So they ask about showing me the real estate upside. Show me the money. The profile there is they're commercial focused buyers usually who prioritize property performance. And what they care is the cap rate and the NOI they're buying it at, and the location as well as the redevelopment potential for future uses, and the market rents versus the in-place rents. So what they're going to do is underwrite strictly the real estate fundamentals. And the key insight there is they may separate the business from the real estate entirely. And the strategy for them is to position the deal as a value add real estate piece with in-place income, but also upside appreciation potential. Four is franchise operators. And their stance is, can I scale this? And their profiles, they're operators expanding an existing brand and an existing footprint. And what they care about is a proven concept and location performance and the ability to replicate it. And how they underwrite is they look at the unit level economics, but also the market demographics as well. And the key insight for them is that owning the real estate is a bonus, but not required. So the strategy in the market for them is they're really thinking operational performance, location strength, and potential expansion potential, or just expansion potential. But there's also private equity groups, and they're thinking, where's the platform opportunity? And these are often institutional or semi-institutional capital groups. And what they care about is the scalability of the business, the portfolio growth, and the exit strategy. So really what they're looking at, and they underwrite based on EBITDA multiples for the business. But they also look at the portfolio valuation, how the real estate complements what they already own. And the key insight there is they often separate the business and the real estate and then restructure the deal with potentially a sale leaseback or a portfolio roll up, or they work on the capital stack for purchasing the property. And their strategy and framework is the platform plus the real estate. Is there an arbitrage opportunity there? So do we have potential for large returns? And why that matters for sellers. And here's the bottom line on these concepts, is that the buyer that you're selling to determines the value, not just the asset. So a deal marketed incorrectly will attract the wrong buyers, but it potentially lead to mismatched expectations, and it could slow down or kill the transaction. So definitely things we want to avoid. Now, if we do this correctly, we align with the buyer intent that we're looking for, and we maximize their perceived value. And that creates competitive tension. So we need to look at strategic positioning. So one deal with multiple angles. And the best deals aren't marketed one way. They're packaged differently for each type of buyer. So know who you're talking to is the point. Owner users, they like lifestyle and control, where investors want to hear yield and stability of the deal. And commercial real estate buyers are looking for value add and upside for appreciation, whereas an operator's for scalability and private equity is the platform and the exit. And that's where brokerage and capital advisory matter. So the final takeaway is that if you're selling a business that owns its building, you're not selling just one thing. You're selling the business, a real estate investment, and a strategic opportunity. And each buyer is going to see a different version of that value in there. And that's why structure and positioning will determine your outcome more than price alone. So here's a call to action. And if you're considering selling or want to understand how your deal would be positioned, let's have a conversation. We can structure it the right way from day one. My name is Bill Rapp. Please visit HoustonRealEstateBrokerage.com. You can figure out how to schedule some time with me. Love to talk to you more about your situation and how we can better your world. Have a good day.